In December 2017, CME futures launched. Bitcoin peaked and fell by 85% over the next year. In January 2020, CME options launched. Bitcoin peaked and fell by 50% over the next 3 months. In April 2021, Coinbase had its IPO. Bitcoin peaked and fell by 50% over the next 3 months. And again, in October 2021, Bitcoin Futures ETF was launched. Bitcoin peaked and fell by 75% over the next year. Bitcoin loves to top on big headlines, right at the moment where everyone is absolutely convinced that the stars are aligned for Bitcoin to move higher. That is precisely the moment where it begins to crash. Now, in 2025, Trump is back in office, and the Bitcoin Strategic Reserve has just been made official. But instead of pushing Bitcoin to new highs, the price topped just one day after Trump was inaugurated on January 20th. Since then, Bitcoin has dropped more than 25%. Momentum has faded, and sentiment has turned pessimistic. So the big question now is whether the Bitcoin Strategic Reserve, or more broadly, Trump, just another sell the news event. A large part of the disappointment following the Strategic Reserve announcement actually comes from one key detail. The US government isn't buying more Bitcoin, they're simply holding what they have already seized. In fact, the BBC called this reserve a pig in lipstick, or in other words, a flashy announcement that masks the fact that nothing new is actually happening. But we don't completely agree with the BBC. Even without new buying, this is still one of the most important long-term shifts we've seen for Bitcoin. This is the first time the US has officially recognized Bitcoin as a strategic national asset, providing it a lot of credibility. That in itself sends a strong message. If the world's largest economy sees Bitcoin as a strategic investment, what's stopping others from adding it now? And we're already seeing signs of that. Saudi Arabia's sovereign fund has accumulated 4,678 Bitcoin, nearly 5% of its portfolio. And Wisconsin's pension fund just added 3,442 Bitcoin, about 1% of total assets. That's institutional scale buying in the hundreds of millions of dollars. And this could just be the start. BlackRock is already pushing Bitcoin to all their clients. Their latest report, Sizing Bitcoin in Portfolios, recommends a 1 to 2% allocation to Bitcoin. Now, that might sound small at first, but the potential price impact could prove massive in the coming years. Total global wealth sits around $900 trillion across assets like stocks, real estate, and gold. This figure is effectively Bitcoin's total addressable market. If just 2% flows into Bitcoin, its market cap would balloon to $18 trillion. That puts Bitcoin's price north of $850,000 per coin. So from a demand perspective, the strategic reserve is long-term bullish. It adds credibility and invites follow-through from other big players. And on the supply side, the story gets even stronger. Bitcoin's total supply is capped at 21 million. Out of that, 19.7 million Bitcoin are already in circulation, and only 1.3 million Bitcoin remains to be mined. So most of Bitcoin's new supply has already been mined, seen by this leveling off of the circulating supply over the years. Now, out of the remaining 1.3 million Bitcoin left, roughly 1 million will be mined between now and 2032. After that, it'll take another 100 years to mine the final 328,000. So at a first glance, with a strong demand and supply, it doesn't seem like we should expect the Strategic Bitcoin Reserve announcement to be a sell the news event for Bitcoin. And as new supply slows and demand picks up, that could eventually lead to a long-term supply squeeze and higher prices on Bitcoin. Positioning ourselves ahead of these big shifts is what we focus on at Bravos Research Digital Assets. We're a team of 3 professional crypto traders sharing live crypto market updates and trade signals in our Discord group. In just the last 2 months, PK nailed 16 straight wins with a 100% accuracy, delivering a 221% return. At the same time, S. Locky closed 36 winners out of 40 trades, generating a total profit of 391%. These are pro-level results, given to you with precise entries, clear targets, and defined stop losses, all in real time. If you've been looking for expert crypto trade alerts, both long and short, click the link in the description below and join our service. Now that we've established that the Strategic Bitcoin Reserve is net positive for Bitcoin in the long term, let's shift our focus to the short-term picture. Since Trump's inauguration, he's announced a wave of tariffs. A 25% tariff on most Canadian and Mexican goods, a 10 to 20% tariff on Chinese goods, and now a new tariff regime that is set to launch on April 2nd, targeting countries seen as unfair to US exporters. Now, if there's one thing that markets hate, it's uncertainty. And that's exactly what these new announcements have been causing. We can see that looking at something called the Economic Policy Uncertainty Index that spiked to one of the highest levels in the 30 years. This index tracks how uncertain people are about future government policies, like taxes, spending, regulations. When it spikes, investors freeze, volatility rises, and risk assets suffer. And we've seen this play out before. In 2001 during the dot-com bust, 2003 because of the Iraq War, in 2008 during the global financial crisis, in 2011 around the US debt ceiling standoff, and in 2020 amidst the pandemic. Each time, uncertainty crushed sentiment and caused market volatility. Bitcoin wasn't around for all of them, obviously, but let's zoom in on the two it was there for. In 2011, Bitcoin peaked in June, just as the debt ceiling crisis escalated, and the price dropped by 95% in just 5 months. It was only once the debt ceiling uncertainty was addressed that Bitcoin stabilized and rose again. Even during the 2020 pandemic uncertainty, Bitcoin saw something similar. It crashed by 50% in a matter of weeks. But this pain proved to be short-lived, as governments stepped in with a lot of liquidity to support the economy. This money eventually made its way into risk-on assets like Bitcoin, leading to a 1,300% rally over the next 2 years as uncertainty cooled off. So today, we may be in a similar setup. Short-term pain driven by uncertainty, but with the potential for a major rebound once the uncertainty around tariffs stabilize. And we can see that expectation in the VIX term structure. This chart shows how volatility is being priced across future months. Right now, all the fear is being concentrated, heading into the April 2nd tariff deadline. But after that, the market is expecting volatility to fall sharply. Every VIX contract, April through December, has collapsed from April 2nd onwards now that the market has a certainty about the end date for these tariff announcements. It's like the market is saying, yes, things are tense now, but it'll be fine after. If that's true, Bitcoin may stay under pressure in the short term. But if tariff uncertainty fades as expected, and that's a big if, then a sharp snapback becomes quite likely. That's why the next few weeks are critical. So Bitcoin could continue chopping right now and even retest this support zone around $70,000. That's the region where the November 2024 breakout began. As long as it holds, the breakout remains objectively valid and keeps us cautiously optimistic. We also highlighted this scenario in our first Bitcoin video, and it does seem to be playing out until now. But if $70,000 fails, that would signal a major trend reversal. In that case, we'd switch from a buy the dip mindset to a sell the rip one. Until that happens though, trying to front run a deeper breakdown could mean potentially missing on substantial gains if uncertainty clears up. And we'd have confirmation of bullish momentum if Bitcoin reclaims this $95,000 level, which was the high right after the strategic reserve announcement. So as traders, right now, there are two levels that matter most to us: $70,000 on the downside and $95,000 on the upside. Everything else in between is likely just noise amid this high uncertainty period.